Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week, and as we've been expecting, the increase of rates have led to a slowdown of refinances. Duh. Of course that's happened. Now, did it happen kind of in an unexpected way and really rapidly? Yes. Will we get a little bit of reprieve? Probably, and let me explain. So we saw a significant decrease industry-wide in the amount of refinance applications from the month of February rolling into March. A steep decline in applications. Well, we saw a proportionally steep increase in rates, and it happened rather quickly. And that's all because of bond market activity. Now, the problem moving forward is going to be that same bond market activity. You have the Federal Reserve, who's continuing to put billions of dollars a month in purchasing power into mortgage-backed securities and other bonds. And at the same time, though, they're expecting inflation to happen, and they want inflation to occur in the marketplace. Now, it's kind of putting a confluence of pressures on the cost of money, the flow of money. We've recently talked about the volatility and how fast money is exchanging hands and how slow that's been. So here's what I think is going to happen. I think we're going to get a little bit of a reprieve in the rate market over the next 4 to 8 weeks, but it's going to be slow. So those of you that are on the sidelines still and you maybe missed the train of the lowest lows in history, you're not going to get that lowest low again anytime soon. If you get a better rate than what's in the marketplace today, you'll probably get it tomorrow or in the weeks ahead, but it's going to be a slow trickle down of the rate because the industry has already made that ramp up into this new zone that it wants to see interest rates at. So what that really means is this: if you're looking to refinance, get your process started now so that when rates do take that dip, it could be for only a day or two, but you want to be in the process and ready to lock that loan as soon as possible. The other thing you want to work for is you want to work against the increase of rates. If things just go absolutely bonkers crazy in the bond market and it gets out of control and rates just continue to zoom, that's going to be really bad for the Fed. It'll be really bad for the housing market. It's going to be very bad for consumers, but eventually there will have to be pressure so that rates just don't skyrocket. There's really no reason economically for that to happen. It's not like people are all of a sudden out of nowhere making gobs more money. Even if they're getting stimulus money from the government, it doesn't necessarily mean you can all of a sudden just afford everything at the rate it's increasing in price. And that is the same for mortgage rates as well. So the other way to approach this is kind of a preventative stance, is get yourself in the process, get started now so that you can get the best rate possible when they take that dip on that day or two, but you also want to avoid any future spikes that are coming in the next 4 or 8 weeks. There will be a lot of new economic information to come out this spring, particularly as it leads to us closing out the first quarter of 2021 and we get the overall economic health. There's still a lot of concern in the jobs market and the unemployment market, with more than 18 million people still on some sort of unemployment aid. You know, we can see the new weekly unemployment numbers can't come out every week to the tune of 700,000, 743,000, 777,000. That's a big number. What's going to be interesting is to see how many of those people that are now filing unemployment are now unemployed again, meaning they were unemployed in 2020, got hired, and now are unemployed a second time in a 12 or 18 month period. I think that's really going to be the tell of the tape at the end of the day, and will put a lot of pressure in the economy, which is going to have to lead to some other sort of fiscal policy to help us get through this rough time. So, in short today, if you have not done your refinance in 2020 and you still are sitting on the sidelines in 2021, get off that fence, get in the process right now, and get yourself the best possible outcome by being prepared. Have a great week, and we'll see you again next week.